So guys, in this video, which is a beginner video to forex trading, I'll be teaching you guys how to place trades and also the different types of order in the market so that you can know when to use various types of order depending on how it suits your needs. All right, now the purpose of doing this is so that even as a beginner, while you are learning how to study charts, while you're learning technical and fundamental analysis, if you happen to be in a group like ours where you get free signals, so you can start testing your hand on either demo accounts or on normal funded accounts and start, testing the waters as well as making little profits pending when you become a professional yourself. So if you want to be a part of our Forex Signal community, there'll be a link in the description. Feel free to join. Now, I'm going to be assuming that you already signed up on the broker. Okay, meanwhile, if you've not yet signed up on any broker and you need a recommendation, well, I use Anzo Capital and they offer like wonderful trading conditions both for newbies and professional. So the link to sign up is in the description as well, just the same way the link to be on our Signal group is in the description. Meanwhile, if you have not yet subscribed to this channel, come on, what are you waiting for? So having signed up on the broker, you can either choose to create an MT4 or an MT5 account. What's the full meaning of MT4 or MT5? It simply means MetaTrader 4 or MetaTrader 5. Now, the MT4 or MT5 is a gateway in which you assess the forex market and you make, you place your trades, close your trades, make profits and all that. So that is the basic tool you'll be needing. So for this video, I know over 70% of us are, we are more of the phone type than the laptop type. So I'm going to be doing this video from the phone because that's what like majority of traders really want to do. You want to be in the office and place a trade. You want to be walking on the roadside and place a trade, and you really need a mobile phone. This is like more of a privileged gadget for you. So once you've signed up on your broker, once you've created your MT4 account and funded it, you'll be given your MT4 details by your broker. All right. So at this point in time, you can download your MT4. You just go to Play Store and search for MT4, MT5, depending on the one you use. I personally use MT4. So once you click on your MT4, now if you're opening this for the first time, your interface might be different. So all you would need to do, first of all, you might see an interface like this. Over here, what you need to do is just click on the plus sign. Now you can see two options. It's either you want to open a demo account. So for those who want to test their hands on demo accounts, note when you make profit on demo, it's not withdrawable. All right. So, but if you already have an account, an MT4 account with your broker, so just come here to click on log into an existing account. So you definitely search for your broker server. Now, among your login details, you will see something like server. Okay, so you can search for your server. So let me just use, for example, I want to use Anzo Capital Live. So once I click here, then I can now put my login details and my password, you get, then that's it. I'll be logged in. So once you're logged in, basically, you would see your balance over here. Okay, what you have on your trading account, you see your balance here. Then the next thing you need to do is, which confuses many traders, is to add the pairs you want to trade. So for example, when you come to this down part of the screen, hope you see where I'm highlighting on the screen. Now you can see some pairs already listed here by default, and perhaps those have already added here to trade. So what you need to do to add a pair, so let's say you want to trade a pair that is not here, just click on the plus sign. So once you click on the plus sign, then just search for it. So for example, okay, let me just come here and delete one and add it back. Okay, Euro JPY. So let me just come and delete Euro JPY from here and add it back. So let's imagine Euro JPY is not here and I want to trade Euro JPY. I'll just come here and search for Euro JPY. Okay, you can see. So I'll add it back and you can see Euro JPY over here, right? As simple as A, B, and C. So having done this, what's the next thing that we can actually do right now? It's to place a trade. So how do you place a trade? So let's say you've done your analysis or you've seen a signal. Okay, let me just go to my notepad. So let's imagine there's a signal on I want to trade, or maybe I've done my analysis, I want to place a trade, and I want to trade USD CHF, all right? and I have some entry points, or an entry zone. So what can I simply do? I come here, I look for USD CHF, which I can see over here. So I tap on it. Now there are two options here. It's either I want to place a new order or I want to open the chart, basically. So I'll click on new order. So the first thing now we need to do is, what type of execution do I want? Now, if you click on market execution, it simply means you're going to be buying or selling at that particular price. So like the market price. So, and the market is moving. So it means you want it to be executed instantly at the market price. Okay. So it's either you're taking a buy position or a sell position. Okay. And that's number one. Then the next type of order is the buy limit or the sell limit. This is like a limit order. So what does this order really do, or what's the meaning of this order? So let's imagine in a signal, for example, the position we want to take is buy. But at this present time, okay, now let's look at this. So at this present time, as you can see over here, the price here is 0.8988. You get? Now, but we are told to buy at 0.8974, meaning the price right now is above our entry zone, but we want to take a buy position, meaning we have to wait for the price to come down. So this is where a limit order comes in. So instead of you checking 24/7 and you have other things to do, you can just simply set it at 0.89, okay, as you can see, 74. So you set it at the zone you want to buy. So this is a buy limit order. I don't know if you get it. Then at the same time, depending on if you're doing your analysis yourself or if you're trading signals, let's say you want to set a stop loss at 0.8924. This is just like I'm giving instances here, so it's not really a live signal. So for example, so at this point here is the price you want to enter. This one over here is your stop loss. Over here is your take profit if you want to set a take profit. So do not mistake it if you're using a, what's it called now, a buy or a sell limit order. So here's your entry price, stop loss, take profit. Now, if you're using a market order, as you've seen, or a market execution, you do not have an entry price because automatically by default it will enter the current market price, but you can still set your stop loss and your take profit. All right. So for sell limit, it's the same thing. If you want to open a sell position, then you can put the price at which you want to enter. All right. So let me use this. Let me use, for example, let's say this, you want to sell. So if you want to sell, definitely you want the price to go like higher a little bit so that you can sell at this point. So if, for example, the price is here and you want it to reach here before it sells, so this is the whole idea of a sell limit. You set it above so that once it gets to your point, it sells. All right. Then this next type of order, the buy stop or the sell stop, is a very confusing type of order. Well, professionals use it. All right. And this type of order actually works, okay, when perhaps you trading trends or you're using support and resistance. Now, what is this type of order? Let me just open my notepad and just use a diagram to explain what this order simply means. Okay, so let's say we want to use a buy stop. Now, what is a buy stop really all about? So let's imagine in the charts we have a, what's it called now, we have a resistance level over here, and this is like the support. So basically market has been going like this, hitting this resistance and coming down. Basically this has been a resistance point. And in your analysis, you discover that if the market is able to break above this particular resistance, then it therefore means it's on a bullish trend. So what do? You can do a buy stop, meaning you are setting, usually if you're using a buy limit, you want it to come lower so that it can go up. But right now, for a buy stop, you want to buy higher, meaning the price might be here, for example, or somewhere here. We are calculating once it breaks this particular resistance to a particular level, you are sure that the price will continue moving up and you make profit. So this is a buy stop. So you set it over here. That's when you use buy stop. So if a person sends you a signal, for example, and it says buy stop, it's simply telling you that, okay, at this point in time, we're waiting for it to break a particular either resistance or a particular level. then we can be rest assured that it will be on a bullish trend for a period of time. Now, the opposite is the sell stop. It's meaning if this is a support, this is a particular support, you are rest assured that once it breaks this support to a particular level, then price is ready to start dropping. So, meaning you selling lower. So rather than wait for the price to get high before you sell, you are saying, no, I want to sell lower than the normal price. So once it breaks this level, I'm sure the price will continue going down. So that's the sell stop. So guys, these are the three major types of orders you always come across. So market execution, basically, if for example you just want to enter the trade instantly, maybe you feel the price is already running, or you have walk of FOMO, fear of missing out or whatever. There are various reasons that can make you use a market execution. Then the buy limit simply means waiting for a proper entry zone, okay, so that you don't have to look at the market. So whether you are there or not, once it reaches that price, it buys. While the buy stop or the sell stop or order simply means you want it to do more like an opposite. So if the price rises above a certain level, that is when you want to enter the market to start buying. While if it drops to a certain level, that's when you want to enter the market to start selling. So guys, hope you we've gained value. If you've gained value from this, do not forget to subscribe to this channel, like this video, and share.